Hello, welcome to Boss Capital channel. I'm Michael Chu and I'm here with Sunil. And today is market recap for the week ending June 7, 2024. So just looking at some of the notes here. Actually, before I start, so I'm going to have another video after this. I'm going to break it into two chunks. The next video is going to talk about the stock trades I did recently, and just talk about a little bit like how to deal with trades in this kind of environment today, related to the market. And so yeah, make sure you follow on that video as well. So now we can get back to the market recap. This week we have Canada and ECB cut rates at 0.25%. So that's their first cut in many years. So you can take it for what it is. Definitely the economy is not as strong as US. And we'll talk about whether US, will likely cut this year and so forth. We'll look at the Fed's future fund rate. One thing I noticed this week, we have lots of weak opens on the day, but we do have strong close. So let's just jump to that. So this is the Nasdaq 15-minute chart. You can see here we have this, last Friday, not this Friday that just passed, last Friday. You see how that was the day we had that huge rebound by the end of the day. On Monday, you can see it kind of again went down. It did come back, not all the way, but not bad. Then on Wednesday, Tuesday, we have another bounce right here, and then on Wednesday was the day we bounced big, because of the ADP unemployment report job number. And then we have Thursday, we kind of didn't really do much, but again we didn't have a that bad of a close. And then on Friday, it was actually the first time where it went, it didn't go down to, well, it went down a little bit in the morning, but it actually didn't close strong. But it's not too bad. Like it basically around this range here, so it's just slightly lower. So really good action overall. Like when you break it down into like the daily, intraday trading. But this is on Nasdaq, obviously. You go to S&P, very similar. We have the same pattern here, pretty much very similar. Like and then so this one, again very close to where it was the previous day on Friday. So very good action intraday trading. So we're seeing that in S&P as well. On Dow, so this was, so Dow was actually pretty good. Just want to make sure I didn't screw up the days here. So this is last Friday, and then same thing here. It didn't go up as much, as you can see. Like even though it rebound, it didn't go up as much as the other two index. And then on Friday, again, this is where it opened right here, and then it closed right down a little bit. So still not too bad, right? This chart still not very bad at all. Just didn't go up as much as the other two. And then we have Russell on the intraday chart here at 15-minute interval. So you can see a little bit difference. Like the V-shaped bounce is a lot weaker. You can see right here, again right here, much less bounce. And then this was the only one day that really bounced, was Wednesday. And we'll talk more about this day, right? This low right here is very key, and we have broken that low in Russell. So because to me, when you have such a strong day bounce, usually that's where I would set my stop on that day, for that day's low, on stock level. And so the unfortunate part is, Russell is just really giving up their gains so fast. And we continue to see that both Thursday and Friday. And so a lot of the stocks you bought, that are smaller cap, you bought on Wednesday, depending where you buy it, you're probably underwater right now. And also not only that, it triggered this low, which is very negative. So we have, again, very diverging situation here, where S&P and Nasdaq are quite strong, and then we have Dow like kind of stuck at the same level, and then we have Russell that is kind of a little bit breaking down right now. We'll look at the daily chart a little bit more, but I just wanted to talk about that because it's very fascinating. Probably for stocks, again, I don't know, like it feels like the environment right now is kind of at best really choppy. But some people might argue differently depending on what kind of stocks you're holding. But for most stocks, it's quite choppy. So you may want to think about your strategy, like whether you want to buy on pullback or breakout. Because buying on breakout is definitely more risk, especially in a choppy environment. Versus buying on pullback, you will have a better chance. Your stop loss will be a lot less. So I'll talk more about that in my next video, specifically about stock trading. So I also talk about this gap up Wednesday. Like, it's very important. Also want to use that day's low, probably as a stop. Again, that's just my trading style. You don't have to follow that. I'm just telling you what I'm doing. And yeah, definitely a stock picker market. Because the market breadth is very weak. If not actually weaker than the week before, and we'll look at that. So it's getting more and more narrow, which is always not a good sign for a market rally. You want to see the opposite, right? As the market rallies, you want to see the breadth continue to grow, and that gives it more momentum and just easier to even pick the right winning stock. Also, like testing levels more than once. We want to see where the support level is, see if they tested more than once. We had the 3-week tight on S&P last week, so we can jump to it right now just to show you, what it looks like. So the 3-week tight pattern, it doesn't really show on the index chart on IBD market search, but you can see like the previous 3 weeks was really tight. We had this rebound week, and then this week we made new high on the S&P, and it closed at the top, and that's really a good indication of the momentum here on the weekly chart. And then on Nasdaq, again, like it's not a 3-week tight, but we have this bounce as well this week, closing at the top, and now we are officially in the 7-week uptrend, right? So it's starting to build momentum again. So previously we had 21 weeks up, then we had this correction, so now we're moving again. So hopefully this could last longer. We'll see, and then the previous one here was 19 weeks, but this one was much bigger correction. This one was, very short correction. So I don't know if it will last. Usually it probably won't last as long. But if we can even get through this, I'm just being hopeful here. If we can get through June, July, or even, part of August, without any hiccup, then we may have another 8 to 10 weeks here of uptrend. But that's, again, being really hopeful here. Again, as usual, we are looking for stocks showing relative strength recently. And we'll talk more about that in my stock video. Again, make sure you follow that. So let's look at the news right now. For Monday, Nasdaq and S&P erased intraday losses to finish higher. So this is definitely as a bullish action for the stock market uptrend. The Dow Jones is also it's near the 50-day moving average. So let's look at Dow Jones for a second. So here's the daily chart. Oh, sorry, that was weekly. Here's the daily. So here's the red line. This is the 50-day. Even on as we talking about Monday is near that, but now we're coming back to test the 50-day. You can see on Friday it closed at the bottom, which is the 50-day, near the 50-day line, and you can see all the moving averages has kind of converged to this level now, right? So at first. So this is a good, I don't know if this is a good action, but at least it's slowly having higher lows and higher highs. So that's the good action. But, so now we're coming back to test this again. So maybe it's okay if we can, bounce back off. Because now we have tested at least a couple of times here, and then throughout the week, we just didn't want to go lower. So those are considered good actions. So if we can bounce off here, maybe this time we'll actually bounce back. So that might be something we hope for. Yeah. So on Dow, doesn't look bad at all. It actually looks pretty good. So on Monday we have the ISM manufacturing survey came out at 48.7, which is below 50, which signal contraction, right? So initially was expecting like 49.8. So things are slowing down definitely. 10-year yield bond fell. So we'll jump to that as well. So we'll go to 10-year yield chart here. So it's been a crazy week. You can see here, it dropped really hard on Monday, Tuesday, Wednesday, Thursday, but Friday was a huge rebound because of the job number. So you know, it's a, I don't know, it's quite an interesting bounce too, right? But we'll see. It's just a one-day thing, but you know, we're still somewhat in the downtrend for this 10-year yield. So if it does surpass here this level here, I think we have to watch out. Again, you know, the market did kind of, you know, did better because, like I said, every day it was intraday was down and then it came back up, right? So in that sense, it did, you know, good. But that's you know, that's because the 10-year also dropping that much. So now the question is, if it kind of bounce back, you know, if it goes higher, how much is the market gonna go down? You know, usually they correlate. So yeah, so something to pay attention to. Obviously, this red line, which is the 50-day moving average, is still moving upwards. So, and then the 200-day is also moving upwards still, unless they start to curve down. So this is kind of a very important level right here between, you know, and I suspect it might just bounce between this level, like right here, 4.5 and 4.3-ish, in the next week or two. I don't know. And then we have Fed meeting coming up, right? So that will definitely move the needle too if Fed says something completely out of ordinary. So that's something to pay attention to on this. So the other thing that's happening is, you know, the oil and gas stock, a lot of them start to come down a lot. So TDW, OII, FANG, EOG. So let's just jump to the chart. This is Tidewater. We are officially in the downtrend right now. It's a pretty steep downtrend. You can see like the stock actually, you know, came down below the red line, which is the 50-day. And look, it never even bounced back. It continued. It followed through. That's a really negative sign. And then now you can see it reversed even on Friday as it come closer to the 10-day. So that's also another negative sign because it just doesn't have power at all. As soon as it comes near that line, people are selling. So we're in negative. So yeah. So you know, oil, you know, may have you know. So this is OII, another one, EOG. Another one. You can see they're all in downtrend pattern now, really severe. You know, this is after, you know, rise, and now it's dropping really fast. So all these oil and gas exploration stocks are just getting hammered right now. So if we look at USO, you can see we are also really clear-cut downtrend. And here we kind of bounced back above the downtrend line, but it gave up pretty quick. So that's another thing that, you know, we'll talk more about in a stock trading video like later. You know, you see this bounce above the trend line. Sometimes the first bounce, and I'm always tempted to buy on the first bounce. But if it's on a longer downtrend like this one, like that has been there for months, over a month or so, you should always like maybe like take a smaller position on the first bounce, even if you want to take, you know, test it. Because sometimes, like I say, the first bounce will fail after, you know, such a downtrend. So it looks like this downtrend, you know, continues after that. And so now, you know, it's going to always, you know, ride this line and go down, ride this line. That's what a downtrend looks like, right? It just always come back to near the 10-day and then it fail again and it fail again and it fail. That's how it keeps getting lower. So that's something to pay attention to when you're looking at a downtrend line. Is where is the stock, how many times it tests this downtrend line. And even if it surpasses it the first time after a longer downturn, you might want to not take a full position, a lot less position, just to test it, because sometimes it's just going to fail because it's just, you know, the downtrend is just so strong, right? So yeah, so you know, after Monday's downside reversal, which is a good thing, but on Tuesday the Russell gave up 1.3%. and it closed below 50-day moving average for the second time in 5 sessions. small caps tend to lag in a high interest rate environment, and you know, the 10-year yield didn't help the small cap either. So this is actually pretty true for the whole week as well. So let's just jump to it. So this is Russell 0. So on the daily chart, so here's the day that Monday. Then we have Tuesday, continue the drop, make new low right here. Wednesday was the big bounce. Thursday is slide, and Friday, look at where it closed, near the bottom, like pretty much new low here, recent low. So this is very negative action. Despite, you know, the other index doing much better, this index is just keep testing newer lows. So you know, and then the upper range right here, you can see the downtrend is pretty steep right now. So yeah, so you know, yeah, you want to pay attention to that, because if this thing cracked wide open, it could go, you know, somewhere around this level, right? So you know, be careful about that, especially if Fed says this week that, you know, hey, we don't see any rate cut coming soon. That will definitely send this down. So watch out for that. Yeah, so this 2100 level continue to be resistance. It's just, you know, and then it seems like it just stuck in this 2000 to 2100 range, and sometimes it will even go as far as 1900. But you know, the good thing is, even though the Fed keep delaying rate cut, but you know, you can see the Russell is like not making lower lows, right? So that's the good thing, and that's probably what it's sensing right now. It's sensing eventually it will cut, but it just keep delaying, right? So and eventually it will, when it does cut, and when Fed announces it will cut, probably it will break this level easily. And that's when Russell is truly gonna break out, is when that happens. You know, a lower interest rate environment will be good for the smaller cap guys when they use their borrow money to do business. So we're still waiting for that. Everyone's waiting for that, and so until then, you know, you're still gonna be a very good stock picker and pick the right momentum stocks and those ones that can go up. Whereas, you know, a lot of them won't. They're just gonna be chop up or even go down. So yeah, money continue to flow in the bonds as a slowdown in U.S. economy is likely. Home builders also fell on Tuesday, 1.2%. Now a lot of them are below their 50-day moving averages, including Toll, PHM, Leonard, and Pulte. So you can see Toll Brothers now is really clearly, you know, in a downtrend. You know, we're coming into the bottom of this space now. Like, we'll see if we find support there. PHM, very similar pattern. Continue to make new low. Leonard, this one hasn't made new low, but pretty close to it. Yeah, so this is the home builder ETF, SHB. So again, we're getting really close here. You know, Friday we did have a little reversal, but still a gap down, so still not very good. So yeah, we'll see if this, like, again, you know, the home builders depend a lot on interest rate, especially for new homes, new home buyers. So we'll see if this can hold this level here. That's very important, because if it breaks it, then the next support is 200-day around this level. So yeah, despite modest gains, breadth was nearly 2-to-1 negative on Nasdaq and NYSE. So I'm just going to jump to this chart right now on the IBD newspaper. They have this advanced decline line here that signifies the number of stocks up or down. And you can see each day here this week, we actually make a new low on Friday. So despite a bounce on Wednesday, to me is like a very important day, and I'll talk more about that in a sec. It's almost like a follow-through day, and so Wednesday's low here was actually had a lower low of stocks, like going down, like more stocks going down that day than up, and so that to me is very negative. And this is an S&P or NYSE stock exchange. Nasdaq, you know, look at this same thing, right? Wednesday bounce right here, and then it came down even lower by Friday, and we actually make a new low. We're pretty much close to the lows from 2 months ago. This is very negative in terms of market breadth. So again, the market breadth is continuing to narrow despite market making new highs. This is very bad sign for the market, meaning we are starting to run out of steam. The stocks that are holding the market up is starting to lose, traction, and this is what's happening. And usually when you see that happening, it's not a good sign for the general market. So this is a very negative. So I just want to point this out. Yeah. So on Tuesday, the jobs report actually came out with a better number. I don't have it here, but I think it was 8 million job openings, which is a lot below expectations. So which was like I say, that was like a good sign for the market that day, but the market didn't really react too much. It bounced back, but it really didn't go up much. And then on Wednesday, it did display bullish action, and breakouts was on great growth stocks was very good. I remember this day, Wednesday. I missed the morning rush. Okay, I didn't trade, so by mid morning it was already too late for me. A lot of the stocks I monitored already went up too much, so I didn't bother chasing it. And then the other thing that happened was like Nasdaq, S&P rose to all-time highs. So let's jump to that. Okay, so let's talk about this first. Nasdaq charged 2% ahead, and it hit an all-time peak, 7,187 that day, and current at that time it was up 14.5% year to date, and IBD also upgraded its level exposure to 80 and 100% range, and according to E-Trade Financial, total of 398 issues make 52-week all-time highs, versus only 200 in the new lows. So that was, like I said, very positive day, more highs than lows, new highs than new lows. Winners also led by 5-3 margin. So that was the one day that the breadth was better, but other days wasn't so good, as we just saw earlier. So the private sector job number was the one that triggered it, from ADP, 152,000 jobs, and versus the 188,000 in April. So it was just a lot lower, and which is good sign for the Fed to maybe start cutting rates. And then the ISM service index, how that one rose more than expected. So that one actually came back above to the expansion territory. And then the yields, we already talked about that. So let's jump to the chart for a second, because like I said, that day was really superb. So this is daily Nasdaq. We have, just go back 2 weeks ago slightly. We had this downside reversal day, and then the next day we have an intraday, like a in range bound trading range here. Didn't really know which way it's going to go, and then after that it actually went higher. Then we had this pullback, which was, this is also a negative sign, because as soon as it hit a new high, it kind of fell back. So that's not good. But then we bounced back, and this was the point where things are starting to look really more negative. And breadth, again, the breadth thing was huge for me. Like, I think it's starting to kind of again continue to dwindle down as more stocks are just not performing as well. But Wednesday was an outlier, so it's almost like a follow through day, because we count 1, 2, 3, 4 days, right? On the 4th day, it actually rose on higher volume than the previous day. So that one is almost like a mini follow through day. IBD doesn't really count follow through days after the initial follow through day, which was like right here, right here, this one. So this one didn't count, but this one did count. And then now this is like, it's good to be aware of high gain day with higher volume. But and so far we've been holding, right? Thursday and Friday, holding really strong. And S&P, same thing. We'll see the same thing. So right here, Wednesday, right? So okay, pretty much break this downtrend line, sharp, really high, and then Thursday, Friday continue to make slightly higher highs, but like I said, by Friday pull back slightly. Again, this is not a big drop, right? As we saw on the intraday chart, it's giving back so little of this gain, right? Very little. So this is very normal behavior. So that's the bullish side of things. Is Nasdaq and S&P are showing lots of strength right now, despite the market breadth going down. So that's let's go back to the notes here. So yeah, S&P, Nasdaq reversed from highs, as does Nvidia, and we'll talk about Nvidia near the end here. But you can see AI plays in the cooling and power generation spaces had sharp losses. VRT closing tumbled 9.3%, closing below its 50-day line for the first time since October. So let's just jump to that right now, because this is a heavy favorite stock for many, not just me or anybody, but like a lot of institutions are into this stock. And so we have this long gain here, going for a long time. The most recent pullback here, and it's gonna make another run here, and this is where it's starting to go down, and really sharp right now. You see this downtrend line is very sharp, and we now at the 50-day, and you can see we broke that, and I mean Friday's action is kind of neutral, but it still make a newer low. So let's see how it traded that day, intraday. So you can see it sharp in the morning, came back down. So it's very volatile, definitely very volatile. So it really doesn't tell me much. So right now the downtrend is still intact. You can see even in the last few days. So yeah, so this is still very negative, and you know, 200 days at 60, and like, I don't know if it will go that far, but it definitely there's a possibility, because this stock has gained so much in a long time. So you know, even you got in here was 40, so you know, maybe halfway, right? Generally they give back around half on the momentum stock. So like maybe, like, I don't know, I'm just using the halfway point, so somewhere like there. So maybe even the 72 level where there was the previous support line. So yeah, something to pay attention to. So that's something that again, not all stocks, and we'll talk about in my stock video later, not all stocks top at the same time. This is one that looks like it has top. Whether you know, this is temporarily, I don't know, but so far it looks like it has top, meaning like it will go into a more severe correction. So we'll see about that, but right now the trend is definitely going that route. So on Friday, you know, the Nasdaq is trading clear of its short term. So again, it's not near the short term average, which is good. You know, and major moving averages. So it's still much further above the 50-day line. So you know, here's the 50-day, and even the 10-day. Look at that; it just didn't come down to it. So that to me is strength. So that's what it's talking about here. And again, S&P closed near record high, so that's another good thing. It's still 1% more than the 21-day moving average. Let's jump to S&P. So here's the green line again. Didn't touch it. 21 days right here. So looks really good technically. So we already talked about this. Dow is closing at near the 50-day moving average. Decliners led advances. So even, you know, so the breadth continued to be bad. Small caps got hit the hardest. We already talked about that. So let's look at 50, IBD 50. That also falling. So let's look at the chart. So the IBD top 50 stocks here. Again, we have this down. So this is a cup. We have a handle pattern, and it looks like so far it's staying above the handle. So on Wednesday, bounce right here. So it looks good so far, and then Thursday, Friday, it comes back to the pink line, 21-day, the 10 lines right here, 10-day moving average. So it looks okay so far. This cup with handle pattern. So there might be a, you know, opportunity here for it to break out, which is right here, at this level. Again, most of the stocks I trade are considered growth stocks with momentum, and so this is a very important chart. And IBD 50 represent the top 50 stocks every week. So we'll see if this thing will break out, because it obviously fell here, and that's the first time. And then this is the kind of like, you know, I would consider that the second time, because it just couldn't, you know, come above it. And so, you know, if we try another time, the third time might be the charm. So we'll see. So again, obviously we have a big week coming. The Fed, you know, we'll see what the Fed say, and probably the market won't make a big move until that day or even the day after. So we'll see what happens then. So, you know, obviously the Treasury yield went up a lot on Friday, as we saw earlier. It is because of the economy gaining 272,000 jobs in May, which is much higher than the expected view of 188,000. This is a really big, you know, growth in terms of versus expectation. The unemployment rate did inch higher to 4%, and also average hourly earnings rose 0.4% versus the previous month, and still 4.1% year over year. Yeah, so here look at IBD newspaper. U.S. added 272,000 jobs in May, so it's, you know, pretty high here. So the fact that the market didn't go down on this news is actually, you know, I mean Russell did, but the other index didn't go down much, right? Like really low, a little bit. So that's a good thing, right? Like almost like, you know, contrarian to the news. So if, you know, so that's another positive, right? So, and then average hourly earnings rise a little bit, 4.1%, and the jobless rate is starting to rise up. So this, you know, this is starting to, you know, getting there, right? Once it hit 4, they say usually start to rise faster. Generally, that's what they say in the past usually happen. So Fed might take into this account as well. So those are things, you know, again, you know, whether they will say there's a rate cut, I think, you know, they'll probably say not much, right? They don't want to change, you know, make the market move in any way. They just want it to be doing what it does right now, which is not a bad thing for the market, right? That's, you know, because they still have a July meeting before the September meeting, so probably they just don't want to say too much, say the same thing. Hey, inflation is still not at our target, so it's not time to cut rates, and, you know, yes, job numbers are still strong, and you know, yeah. So you know, let's jump to it right now. So you can see June 12th Fed future fund rate at 97%, no change. July 91%, no change, right? So like I say, they probably won't say too much that will affect, you know, the market. And then July, they might say something, what they're going to do in September, and that's the big one, right? So we might have one more month, July 31st. Oh, that's a while away. That's more than 1.5 months away. So yeah, so by that time, they might say something, and that meeting will be more important. But look, the rate cut here by a quarter point decrease. It was over 50% before the job report. So now there's a higher chance that it will stay the same. So then November, that's when now it got pushed from September to November a little bit, 47% of a rate cut. And then December, same, no change. So look at the GDP. One thing that happened, you know, we talked about this last week. It dropped significantly, but then this week it bounced back to 3.1%. So that's good news, and that's another. So that's kind of funny how it coincides a little bit with the job report, right? So now it looks like you know, the Atlanta Fed GDP estimate is still pretty good, 3% GDP growth. So let's look at fear and greed index right now, where it is. So look at this. Yeah, so I don't know, like this one has dropped quite a bit in terms of the fear and greed index on CNN. It's neutral It's on the almost to the, yeah, it actually went to fear level this week. And then the survey from AAII, it didn't change much this week, but it has dropped significantly from 2 weeks ago. Oh, the bears also risen. So this week it actually risen. So the bullishness stayed the same, but the bears, a lot of neutral went into bears. So definitely more bearish sentiment. So yeah, so both of those fear and greed index shows that there's definitely more bearish sentiment. So when the market leans one side, generally it might go the opposite. So we'll see how that goes. Let me jump back to the notes here. So next week we have Nvidia starting Monday with a 10-for-1 stock split. And we'll look at the chart in a second. Wednesday we have CPI. This is really unusual for the CPI to come out the same day as the Fed meeting. So again, it's unlikely they'll, unless the number change a lot, like it's unlikely they'll change their tone. And then Thursday we have producer price index, and we have earnings coming out from Oracle, Avago, and Adobe. So all the tech guys here. So those are important. We can look at the economic calendar again, just to make sure anything different here. So yeah, CPI 3.4% year over year, course 0.1%. Okay, so they're expecting a lower number, 0.1% versus 0.3% previous month. So but the CPI year over year is still 3.4, and then the core CPI is 3.6 down to 3.5. We have the FOMC meeting, and then producer price index also very low, 0.1%. So I mean, hopefully we'll meet those numbers. And then we have consumer sentiment on Friday. That's pretty much it from the news side. Yeah, let's look at RSP QQEW. So those are the equal weight R's, S&P, and it's pretty narrow trading right now. So this one looks not too bad compared to the advanced decline line, because that one actually going down, hit new low, whereas this one didn't hit new low yet. So that's slightly better. And then the equal weight Nasdaq also looks better. So this one obviously deal with the price, whereas advanced decline line doesn't deal with the price. So from a price perspective, it actually didn't go down, which is a good thing. So again, that's a positive. Let's look at gold and copper this week. So gold has kind of fallen apart as well. Very similar to the oil chart, right? So CP copper. So that's the first time under the 50 days. So that's very interesting on the gold. And then copper, same thing. First time under 50 day. So look like these guys have top, right? So generally once it goes under the 50 day, we can consider this a correction now. So this chart, VIX, the volatility index, very interesting, because last week we were at here near the red line, and we came down last week on Friday because of the rebound, and then Monday, Tuesday, the volatility index kind of just range bound, and then Wednesday was the big up day, and then it crossed back below 10-day moving average, and then Friday was really surprising, right? Because the market index are all red, they close red, and look at where the VIX is. It's at the bottom. So again, there's just not much volatility right now, despite what has happened this week, which is very fascinating. Again, this is a positive sign, because I expect more volatility, but it doesn't appear to be. So this week, the IBD market trend, they moved the range of buying allocation from 60 to 80 to 100 now. So this range. So again, pretty much in full mode, because on Wednesday we have like almost like a follow through day type of trading day, and market make new highs on that day, and so they move that allocation up. From the accumulation distribution side that we track here, you can see there's still way more distribution than accumulation, almost double if you look at the numbers in some days. Most of the days actually, there's way more distribution than accumulation. On the industry groups, very similar, almost double. More industry groups fell than being accumulated. On the sector side, we saw some bounce in tech, but then by Friday it kind of sizzled. And then retail this week didn't do as well, because last week we thought retail maybe, change of tone, but it really kind of died pretty quick. Industrials continue to weaken. You can see it's the highest numbers here. Health, again, in more defensive type of environment, where does the money flow? They flow to the defensive sector like health. And then commodities continue to get pounded, and even financials are not doing much better. So overall, you can see the accumulation is just not very much. The breadth is so narrow right now. There's just not many stocks are doing well. So this is a very tough environment to trade in, and yeah, you really have to pick the right stocks. Like, this is more difficult than ever. So we're gonna look at the spider sectors again, because again, we're really trying to understand, as we saw from the accumulation distribution tracking we just saw, it's getting weaker right now, getting better. So let's look at the sector spider ETF here to see if we see the same thing. So we see that XLK technology are holding up pretty good, and we are near a breakout line right here. So if we can break out right here, that will be good for the technology sector. So again, we'll see if technology can come back up and lead. But right now, we just, despite this index, like I said, it's ready to break out, we haven't seen much stocks being accumulated, right? And when we say accumulated, not just the price action, but also with volume. So that's what we just talked about. Includes both volume and price. Whereas this is just price right now we're looking at. So that's the difference, right? So the XLC, I noticed this whole week has been trading well until Friday, but it did break out here on Wednesday, and then Thursday went higher. So this is looking pretty good, better than XLK. But again, Friday, I'm not sure why it kind of came down quite a bit. But we're still above the 10 days, so looks okay. So this week is a bad week for retail. You can see we closed pretty much at the lows. So whether we can bounce, we're still in the uptrend. You can see we're still on the uptrend mode. Whether we can bounce from here, we'll see. Hopefully it will bounce. The consumer discretionary also looks good. It kind of moves uptrend right now. So yeah, looks good. XLP, consumer staples, also looks good. It's on the uptrend right now. Again, a lot of this index are near highs right now. So I think that is another good sign. I think, like, if we can break out this zone, that would be really good. Then we go to industrial, which is hasn't really gone anywhere. Again, if we break above this downtrend line for industrials, that'll be good, right? Same thing with the materials. Again, you can see Friday is like kind of come back to the lows again. Utilities is probably the one that we talked about earlier, especially the power group. They're getting killed right now, so they're making new lows. Health is doing really well. Look at how many days up. So the health is being accumulated as the market gets a little bit more defensive behind the scene. So that's something interesting. So we're still not quite near breakout zone unless you want to, look at this handle here, which is very close to breaking out. Energy, again, that's the one that's really in a downtrend. And then financial, it's kind of starting to dip back above the 10-day, which is good. So again, not much of a movement, but at least it's starting to, try to come out of this downtrend line. So again, so all these index look pretty healthy, but they're near their previous near a buy zone. This is real estate. Has a bad drop on Friday, but did rebound back to the 10-day. So that's still considered healthy. So we'll see if this also comes out. But in general, most of the sectors are acting okay, except the one obvious one is energy. That's not doing so well. About the subgroup. So we'll start with technology subgroup, semiconductors. So this chart looks really, really good, right? We have this nice breakout. It pulls back to this buy point or lower than that. We test that below the 10-day, and then we bounce back. Again, Wednesday, we make new high just like the market did. And then look at Thursday and Friday. It didn't really want to come down to 10-day. And this is, I love saying this line. It doesn't want to come down to 10-day after, pull back. 2 red days, that's always a good sign. And then volume also came down. So that's also another good sign. So the semiconductors are acting really well. So let's just jump to it. NVIDIA. This chart broke out even before the SMH, and it's again we have this. Again we see this right here. It's so subtle. Let me take out my markups right now just because it's just really hard to read. You can see it's so subtle. It doesn't want to touch the 10-day green line right here. It bounced on when it came near to it, and then look at this week. It make new high, and then it kind of goes sideways. It doesn't want to close near the lows. It doesn't want to close or come close to the green line. Again, this right now Nvidia is up 29% from this level, and the 10-day moving average slope is pretty strong, like over 45 degrees angle, and this is looking really strong right now. And coupled with the industry group itself doing really well. Another chart that is looking good is ARM. We had this really strong gap up on earnings here, and then we kind of fell apart. A big correction, building this base, and now look at what it's doing. It's coming back up, and just slowly, and now we're starting to see a little bit of like acceleration here because it's starting to move away from the 10-day a little bit. This is the green line right here. So ARM is coming back up. Relative strength, you can see that really strong. It's outperforming the general market. So ARM is another really strong one. Taiwan Semiconductor, this one just broke out this week, see on Wednesday, and again very strong slope line for the 10-day, so looking very good. Let's look at Qualcomm. This one is slightly still in this pullback zone, hasn't made new highs, so slightly weaker. Now there is some stocks that are kind of came down. Let me look at Pi, Impinge. Not sure if there's any news on Friday. It kind of gave up on this right here. It was acting okay, and then it just kind of broke down. So that's the problem. Another one that I follow is Cyrus. So this one, okay, so this one did make new high, so it took a little break here. Look at how tight the trading is. It did touch the 10-day a little bit, but then it just bounced off it, and now it's looking healthy again. So yeah, so those are the semiconductors. So AMD is not as strong. It's just again going sideways. Hasn't really taken off yet, and generally, I mean the good thing is you can see a lot of blue volume here on the high side, so that's a good thing. But yeah, in general, it just hasn't, not like ARM, right? Like this chart look really similar to ARM. I say ARM is like more upper here now, right? whereas AMD is just near the 50-day line. So it looks like it's having trouble moving up. Okay, we're going to jump to the software group, IGV ETF. So last week we have the really bad fall on Friday. A gap down, 5% loss that day. Then on Monday we went down a little bit lower, but we rebound from there. So so that's a good sign. And then not only that, it kind of recovered back all the way to the 10-day this week. And the good thing is, you know, sometimes like I say, when you have a downtrend, it generally will come up to 10-day, and if it's really weak, it will just come back right away. And it hasn't done that so far. So it's just holding at that level near the 10-day. Like, so in a way, it's digesting the gains, like right here. So people want to sell, you know, they got out, but there's more buyers in a way. That's why it's holding so tight. So that's a good action. 3 days of tightness, I like it. So hopefully the next one will be like, you know, this right here. So yeah, so this is also, you know, a longer downtrend line. So this obviously fell. So we'll see. Once it comes above here, we'll see if we can hold this level and then go up higher. So the software group, you know, has been under a lot of pressure. There's no doubt about that. So we'll see if any of them will start to come back. Let's start with some of the bigger caps. Yeah, let's start with Microsoft. So we see Microsoft following the same trend. It's starting to bounce back here, slightly above the 10-day moving average. So far, good action. Google, very similar, near the 10-day green line. Again, they're all not far from the highs, so that's why, you know, these are the bigger caps with a more weight on the Nasdaq, and that's why Nasdaq is doing so well, is because all these big caps are holding pretty close to the highs. And then we have Meta. Meta also starting to look more healthier. It has now come back above the red line, which is the 50-day. And again, 3 days of tightness right here, very good sign. So this is very healthy action. Then we have Amazon. Again, same thing here. Amazon's above all the short-term moving average and the 50-day. So it looks very healthy. Also near new high. So it looks very healthy so far. So then I'll just finish with the other two, Apple. So Apple, you know, big news this week. Even though I forgot to put in my next week's things to watch. They have their conference for developer, so they might unveil some cool technology stuff. So watch out for that. So that might, you know, attract more. You can see it's getting ready to break out, like getting closer right to this event. They always like to do that, right? You know, and then if it's really good, then it might break out and go higher. So yeah, so basically the stock is running up to this news conference to see what they're doing, you know, with AI stuff for sure. So that's something to watch out for. And again, that might also excite the market. Like honestly, this market is running on AI, man. The Nasdaq, really, the AI is the highlight of the tech side, and so yeah. And then we have Tesla. Wow, this is just continue to go sideways, this stock. Again, I personally, I don't like this pattern. Like, it's an L-shaped pattern. Yeah, so L-shaped pattern tend to fail and then might go lower. But again, if they come up with some good news, maybe it'll go up. So really depends, right? But it's just I don't like the L-shaped pattern that much. Look at a couple of bigger guys. CrowdStrike report earnings this week, did really well. You can see the jump right here. This is, you know, you can see IBD market search draw this cup with handle pattern. It's a very steep handle, but sometimes steep handle can work. And you can see this 1 day bounce really, like really strong, right? Because it went back above all the short-term moving averages. And so now we're in the second half of this handle, in the upper half. And so we're very close to breaking out of this handle. So and this is a really good time period, so of correction. So we have this long big run we digested for like the last 2.5 or 3 months. So now if we break out, who knows, we could have a good run. So CrowdStrike is probably one to watch.
It's also getting added.
You also mentioned like they get added to S&P 500 since Friday, so that means Monday will open, we'll have this gain right here, 5.3%. So that means it's probably near breakout, right? 367. Yeah, it broke out. So watch for this. It could shoot up really high, just because especially if we have a strong opening. IBD, like Mike Webster, he doesn't like strong opening on Monday, so we'll see. But this stock probably will have a strong opening, so watch for that. Other important software stocks that are bigger size are like Salesforce. Salesforce obviously fell really hard on earnings news, but look how fast it came back up. It's almost halfway now. So I think this is good, and it's holding tight. Like it's this is the 10-day line. Look at Friday, it didn't come back down, right? It's just holding tight near as the 10-day comes to it. So that's also a good sign. But we'll have to break through this, and then continue its upward trajectory to eventually test the 50-day. So that's something to watch out for. And then we have ServiceNow. ServiceNow very similar. It also went down. I can't remember. Yeah, it's probably on the same news as Salesforce. So here, same action, right? Like it came back up, and here's the 10-day. Look at what it's doing. It just closed very tight. That's good action, right? So as it comes near the 10-day, we don't want it to, just bounce off and go down. It didn't do that. It's just digesting the recent gains, going sideways. So if it kind of breaks through, we have maybe room to run, right? So now it looks like the software group is, starting to show some power. I think the one stock that came to my mind that's kind of like a name that has been forgotten is Palantir. It's starting to build this nice base right now. Like this is a pretty long base as well. Look at this, obviously it was in a downtrend. We did break this downtrend in the middle here, and it fell. I can't remember. Yeah, earnings was the reason, I think. And then this time we broke through it, and it followed through the next day as well. So and look at Friday, it kind of fall back slightly. Here's the 10-day slope line, really strong slope line. So I think this one might be worth paying attention to. So here's my watch list. So this is dated April 9th to now. And so it's been like almost 2 months. And the leadership, here we have WGS in the health biotech, INSM in the health biotech, ASPN in the chemical specialty, ZIM. So the red, we'll talk more in my next video. Make sure you follow that. ZIM has kind of fallen a little bit, quite a bit, and transportation ship group, HIMS in software, medical, H-Row in biotech, Twist in biotech, Audio Eye in computer software, Bluebird in transportation, Vital in food meat products, DMTX in medical. Yeah, so the color code, like the red kind of more in the downtrend a little bit. Like I define downtrend loosely. Basically, they're just going down. The green are still holding up, or they're moving up. So CRDO in the internet, AGO, biotech, ANF, retail apparel, NVIDIA, Turn in biotech, ARM, Prime, biotech. So lots of biotechs. MNTK, Energy Alternative Order, First Solar, Snap in the internet content. So the orange are the ones that kind of like going sideways. It doesn't really have much direction, like hard to tell whether it's in the uptrend or downtrend. Chewy, retail, THC, medical hospitals, CAMT, electrical science, Moderna, oops, I skipped Comrie, transportation, Cyrus, ATGE, service education, CAVA, retail restaurant, FLNC, energy, FN, odd. So as you see, you go down the list here, there's more red now. Odd, cosmetics, Eland, medical, gas, transport pipeline, ASC, transport pipeline. So this week I noticed there's more stocks kind of going downtrend versus last week. So that's also not a good sign, right? Because these are like the top 50 stocks here. HG insurance downside, so this is like going sideways. On and on. Retail apparel, PDGX, medical, Birkenstein, apparel, shoes, NVMI. Yeah, this one's looking pretty good. Foot 2, investment bankers, Hood, Robinhood, doing good. AWOF, aerospace, pins, internet, PRCT, medical, LTH, leisure, CRS, steel, KD, LNTH, HWM, form. So you can see it's starting to get more red. Some of the ones that have fallen, ML, Pi, CLS, that was in previous weeks. So this is since April 9, and if we go to the more recent one, May 24th to now, so like slightly 2 weeks. And I'm only looking at the highlight ones too, because the one that's not highlighted is on the other list. So like GPS also fallen back. Guidewire is up 20% since May 24th, doing well. ESTC. So these are all the software group. Smart software group. Hello Biotech. Good RX software medical. So that group looks pretty strong. DKS, Burlington. So those are retail. We already talked about CrowdStrike. We have CARG Internet Content, Palantir. We already talked about CRM, DCBO, and other software. So there's more software group rising now. SLG, Cart, Instacart, Make My Trip is coming back. Vortex, this is medical biotech. ANIP, TSM, we already talked about that. SRPT, ACMR, HQY, yeah, NVO, Core. So yeah, those are in the top 50 here. Yeah. So yeah, make sure you guys follow the next video. We're gonna go dive into some of the trades and some of the stocks that I'm monitoring. Thank you for watching this video. If you like, please subscribe and like this video. Thank you.